Good morning, everybody. It is Wednesday, February 23rd, 2022, and we're going to get started with our pre-market analysis on the S&P 500 futures market. So the last few weeks have been quite a doozy on the market, pretty two-sided and wonky, I guess is the best word that I could choose. Just something quick and interesting to note about yesterday is that we basically traded right between our two major eye levels here. So we came up and 24 looked like it was going to hold here towards the end of the day. But let's take a look here. Where did we start out? So we came up just 2 points in front of 61. The market sold all the way off, came right to 62 here yesterday afternoon, broke it by I think one or two ticks, and went ahead and chugged all the way back up and found resistance here right at 24. So we held 61, came down to 62, popped right up to 24, and then basically had a lot of trouble getting through 24 here in this overnight session. And it looks like they're trying to kind of jump through and break through that now. So just kind of interesting that basically our two major eye levels, the top one and the bottom one, was the range for yesterday there, and basically held that 62 all through the overnight session there before the open. So pretty cool stuff. And then you can see in the overnight session, we actually came down to our eye level at 51. So it came down in the overnight. This is coming into yesterday morning after Monday. Remember, it was closed for President's Day. Came down right to 51, bounced off of that, came back and then held 62. Went all the way up, like I said, right to this eye level, to the tick. I mean, this stuff is just unbelievable. In such a crazy, wonky market, we're still basically trading to and from our major and our minor areas of congestion, right? The things that we've been kind of talking about for a few months now. So I just thought that was really cool to point out kind of coming into this morning. And so let's go ahead and do what we do every morning. Dial up to our ultra high time frames. This is our first meet for the week here. And I will not be here tomorrow or Friday. There's a Traders Expo in Vegas. So, I mean, there's stuff around 8 a.m. that starts. So, I'm basically out of here early in the morning on Thursday and Friday. So, I won't be here. I might be able to come in and get a pre-market session. So, we'll come in, do 6 to 6:30, and then I got a jet. So, let's take a look. Let's go all the way up. I mean, yearly, what can we say? We're almost right back down to the major pullback to 42.12, which would be 50% of of last year's price action. All right, so still kind of holding above there. On the 3 month, we're way down at the bottom end of the current 3 month candle, still way below 50% of the previous candle there, and way below 50% of the current candle in progress. This will close in one more week. So we've got, what, 5 more days until the 28th. So however many trading days that is, I don't know. But only a few more trading days and this is going to close. You can see that potential bearish divergence as we push to higher highs. RVI is pushing significantly lower. So that is that clue there, again, on the 3 month for the pullback. Remember, when we got the clue back in February of 2020, this candle closed in February 2020. We had the bearish divergence kind of similar to what we see right now, and we got the COVID correction. Again, this was probably a little bit more exaggerated as far as the kind of correction that happened, but we've got that set up there. And then just a little bit before that, if anyone was trading for 4 or 5 years now, you should remember the big correction that happened at the end of 2018. I think it started in September of 2018. I totally remember it because the volatility went crazy. This was now like maybe 2 years into my trading on the S&P, and so this was one of the biggest corrections I saw. So this was back at end of 2018. Here's our one in March of 2020, or probably just going into February of 2020 is when the correction started, and then in March we kind of hit, and going out of March is when we just started really selling off, and then came down to that major low. So right now that same pattern is in play. The one that we saw back before the 2018 correction, and the one we saw before the March 2020 correction, we now see it here, February going into March of 2022. So we'll see if that ends up carrying through. It doesn't have to, but I will be watching, and we are kind of keeping our eye on it. So we'll see what happens. Monthly already printed its bearish stuff. We've already got the beginning of the correction, right? And on the pullback here, really don't have much to say. Now we're still below, basically, yeah, we're below 50% of the previous monthly candle, which we said was a very bearish, it's known as a bearish engulfing bar, very bearish clue for the market. And again, we still have not been able to get through 50% of that previous candle, and we're actually basically all the way down to almost 100% correction of it. So, or 100% retracement, or however you want to phrase that. But we're basically down. So things on the monthly, things on the quarterly, and then that yearly, it's all looking super, super bearish up here. And then our weekly confirmed the monthly bearish signals up at the top, which, again, led to the pullback here. And what the only thing I'm really noticing on the weekly right now, outside the fact that we came up and tagged the back end of 45.70 to 45.80 and failed, um, we've got a potential bullish divergence. And I told you guys I saw this back when we were up here at 4,400. So this has basically started out up, I believe, around here. And as price comes down, we're still seeing the divergence. And I told you that's the problem with seeing these type of divergence signals. Sometimes the market can come all the way down to that major swing low that we're comparing with and still get that bullish divergence. So for now, it's still there. In such a bearish market, I'm not so sure that we want to just hang our hat on a bullish signal on a monthly chart or on a weekly chart and buy the market. So I'm sure you guys understand that. But I'm just kind of watching, because if everything else starts to line up for the bulls off the lows here, we could get that attempt to chug out, and it would give me a little bit more of a stronger bias if the price action starts to do what we would expect from these signals down here. So we'll see what happens with that. So weekly, basically the same argument, potential bullish divergence off lows, and then our monthly and our quarterly all look pretty much the same, which is very bearish. Coming down to our daily, yesterday's low still technically is a bullish divergence, kind of agreeing with what we saw up here on the weekly chart. So there's two time frames coming into alignment on the higher time frames, which is a strong indication. However, we have to keep the context of the market in our eyes here. This is, a super bearish market, and every time the bulls try to bring the market higher, the bears jump in and swat it down. And wouldn't be too surprising if that happens, even with all the bullish clues here off of yesterday's low. So on this daily chart, outside of seeing a pretty clean bullish divergence from that low, not really much else to say here. That candle, that close from yesterday, looks just as bearish in my opinion as the previous two or three candles there. I know it's green. I know we closed at higher than where the candle opened, but overall looks pretty bearish to me. Of course, getting through the high from yesterday might start to give a bit better picture there for that bullish case. So, it just is what it is. This is how we're seeing the daily right now. I don't know what else to really interpret from it. So that's what we have, a potential bullish signal from the overnight or from the previous daily low there. And, we're still within yesterday's price action here. So getting outside of those two extremes of the previous high and low, previous daily high and low, might give a cleaner picture here. And then on our 4-hour, let's see. It's just so tight up in here, it's hard to really interpret anything. We do have a bearish signal from the previous daily high, and a bearish signal off the overnight high right now. So we've got two bearish signals off the highs. The 4-hour doesn't necessarily have the sexiest bullish reversal pattern going on over here. So we don't necessarily agree with that daily signal from that low. So starting to get a little wishy-washy as we get into intraday time frames here, which is what we can expect, again, because of how the market has been. So just looking at the 4 hour here, if I got a really nice local 4 hour bullish divergence, I might actually have a little bit more faith that in some type of breakout through the high of yesterday and then maybe through the retracement of this local leg that we're in right now. But I don't see that on the 4 hour. So doesn't mean it's not going to do what I just mentioned, breaking out. But because I don't have that nice clean 4 hour signal there, I have a little bit less weight on that expectation. We could come all the way back to these swing lows all the way back here from the beginning of when we started to kind of get wonky here in the market after the nice directional sell-off. If we come down to those lows and come up to the low we made last night, you could argue that we're much lower in RVI, so there is divergence there. I just would have rather to seen an actual nice local bullish divergence like you guys uh, know that I point out all the time. Maybe just like this one here off the highs from yesterday and the inverse, but I don't see it. So all we see here on the 4 hour are bearish signals from the overnight high and the previous daily high. And looking at the retracement of the most local leg, we're still basically holding below 50 and 38 here. So getting up through the previous daily high gets us right into that swing low here and the 50% right around 43.65 to, or let's say 43.60 to 65 there. So that little zone right there, go and highlight it, would be interesting to, will be trouble for the bulls here in my opinion if they do push up into this area. So getting through there would be a good thing for the bulls. And then if we can get through there, there's two things that I'm noticing here. The line that I drew here, right around 44.09 to 44.10, and then just above it, that swing low there at 44.2275. It is just about a 10-point range or so, but something right in there also, in my opinion, looks interesting. So we've got those two zones above us. And then if the market does continue to sell off, we're going to look at the shorter time frames here. So let's look at the hourly and take a look. We have our major levels up here. Again, holding 62. Actually came to that minor eye level here, held 62 and came right in front of 61, sold off, came right back to 62 and held it, and then came up to 24 here and basically is having trouble in the overnight. So I love how well the eye levels are still working despite the choppiness in the market. So let's take a look here. That little area that I shaded up above, you can see it's shaded there from last week. And look at what happened here yesterday, or what was that? Must have been Friday. We came right up into that shaded region. That's the same region I just mentioned, I believe. No, take that back. That was this area right up here. So we've got two zones here. Again, right near our 15 quarter eye level. Might be an interesting trouble area for the bulls there. This little shaded region I think is basically done with now that I look at it. We have that swing low, so watch 81, 81.50 right there. If we get through 61 here and start to chug up to that expected resistance up around 44.10 to that swing low at 44.22, we might have trouble right off that 81.50 there. So watch that stuff to the upside if the bulls do get there. I'm still bearish oriented or sell side bias, so might make more sense to sell the sucker expecting lower here, but you never know. Never know what the market's going to do. So on the 60-minute, that's kind of what we have above us in this local region here. And then if the market sells off, looking at what we're pulling back into, on the 60-minute, I don't have all of the details in here. So all you can see basically is 50% of yesterday sitting there around 04. Getting through that would be a clue for anybody who understands how to read the previous daily high-low stuff. That would be a bearish clue there getting through. And then down through 62 and the low at 50, yesterday's low at 50 there is going to open up pretty much one by one each of these levels. One major thing I'm noticing is the 27 extension of this leg here brings us right to our eye level at 41.89. So that would be a good target if they end up coming down, getting through the previous daily low, the major target for me would be all the way down to 41.90. And then there's going to be other stuff below us here, but we'll worry about that if we get there. If the sell-off starts to happen, it can get pretty violent. So we could correct 150 points in just an hour, and we'll have to come back and look. But the other side of that is we are in a fairly tight market. So for all we know, we could just chop around here this morning and not go anywhere. So rather than spending 10 more minutes going through every possible level, we'll just look at the most immediate area here. And that, like I said, that 89 would be a larger target, keeping in mind that we have the other levels that are in between that could be trouble. So you want to take profit there in case they do bounce out like we see on so many other examples here in the past. So let's go down to the 30 and the 10 and we'll look at what's right below us here in this most immediate area. And then we got to get ready. The market's just about to open here in about 3 or 4 minutes. So on the 30 here, just looking to the local area, we've got a prediction point at the level that I was going to mark here. Going back, let me see. So going back to that 60, what stood out to me was these two areas of resistance right here. We've got the high there at 88.25, and I think this was a tick above it, 89, 3 ticks. So that little 88.25, 89 level looked interesting to me. And if we look here now on our 30-minute, we basically have a prediction point sitting right there. So that area to me looks interesting. If we pull back and we get through the 50% of previous day, that to me looks like a good area to find some support and some contention for the bears as the market sells off, if it sells off. So we've got that prediction point there. That looks really good to me. And then these two levels here, again, we mentioned 62 when we were up on the 60-minute chart, but this other prediction point also looks like it might be relevant as well. So we've got the two prediction points below us, and then we're down into 62 and then the low of yesterday. So that's in the most immediate area below us. And then looking at the retracement of the most local leg, which would be 62 to the overnight high. 50% happens to basically be 50% of yesterday. And then the 61.8 is our eye level just in front of that first prediction point. So there's one other thing to note here. If they do end up getting down through 50% of the previous day, I do think there's an argument for that 92.75 eye level. They could front run, or 93. They could front run that CP and use that as some type of support. And it might just have to be, again, a little shaded region here below us there, and then down by the other CP there, right? So if they come down, and if the market comes down and price gets through 50% of the previous day, we have this little area between 89 and 92, 93, and this little area between 73 and 76 that look interesting. So keep that in mind. We got to jump down to the short time frames, get ready for the open here. So have a great day.